How to buy the triple Qs. On the opening bell, you can see the big red bar. That it was exactly right there at that 280 area. You can see the breakout. This is a 15-minute chart. When we look at the 30-minute chart, how to trade the triple Qs, trading the options, you can see the big dip, and then we have the big rally. The PPI data came out very strong for inflation, and bad news became good news. How do I? There we go, got an alert. How to identify the breakout. These are the triple Qs, the 280 calls, intraday. The low, when we hit the low on that red bar, the option price dropped to 329. Then we made a high of 591, and we're currently printing at 569 by 577. And you have to know when to take the profits. That's why you want to get in the live trading room, and we'll let you know how to sell them. That's what everybody always struggles with. This is an intraday 30-minute chart on the triple Qs, and this is a resistance on the current 30-minute level. How to buy the dip on the triple Qs using the 280 calls. The low on the triple Qs was 281.59. Yesterday's close was 283.85. So when we hit that, we started immediately with the breakout. That's when you make the transaction, and you have to know when to sell. And these go out 3 days, and this is intraday. This is live markets. It's in the morning now, and we're still holding right there on a 30-minute, which is the bigger part of the previous 30-minute bar. So you have to know how to let the winners run as well. That's why we're going to go back over to a 3-minute chart, and we can see that we have a little mild pullback from this big engulfing bar right here. So the breakout, identify shorter time frame, 3 minutes. They fade, but they hold support, so you don't panic and get out. Then they pull back, and now we made another new high. We came right up to the intraday high right there. That's where this little pullback was, and that time frame. And then we rally right up to this little 3-minute reversal. That's all that is. And that is how to define price resistance. And you have to know when to sell the option. Okay? So you have to take the profits when we tell you, because the high was 591. Now the bid is 540 by 547. So the value drops. When you drop on a 3-minute, then the value of your 280 call strike price, bid and ask, will drop lower. Go ahead and sign up for the free 5-day trial, and we'll get to know each other, and we'll do all these trades live together in the live trading room. And you can trade these options intraday, how to trade breakouts using the shorter time frame. And once again, this is that support level right there. Okay, and you can see the buy wick right exactly where my trend line goes. So you just have to know how long. That's a 15-minute red bar right there next to this one. Now we're going to see if this one becomes greater to the downside versus the previous upside. So as we understand taking some money off of the table, okay, exit. There is 2,800 contracts traded at the 281 strike. We traded the 280 strike, and now they're at 553 by 564. So how to let that, we hold it until we break that low bar of the previous low. So we have not broke that, and then we'll start selling into the move, knowing when to exit, my friend. That is the relationship we're going to have. We're going to hit the ball over the wall. Yep, that's right. And knowing how long to let the winner run is always a challenge for people. So we have a stop loss. It's called a profit stop loss. So we're coming out now because we broke slightly below the previous body of the price of the green bar. And you can see it. It's right there. So you have to exit the 280 calls because now they're 533 by 543. And as that 15-minute bar goes down, then the bid and the ask of the 280 call goes down. We'll have a lot of fun. And this is intraday. It's live markets. It's in the morning.